Okay, welcome everybody. Just double checking all the settings here, and I'm checking my microphone. It looks like it's coming through loud and clear, so that's all good. The team will also let me know via my phone here on a text message if the sound or video is not coming through, but it looks like we're in business. So welcome everybody. Bitcoin and blockchain. We take a closer look and find the best stocks involved in this emerging asset class. I can see on my other computer here, I'm popping up. And that's good. So we're live on the broadcast. So what an exciting topic, a bit of a controversial topic for some people. I know when I first heard of Bitcoin and started to understand it, I thought, isn't that sort of something that scammers use? You know, these people that, buy drugs on, what was it called, Silk Trade, or what was it called? Effectively, one of those nefarious websites out there that were using crypto technology to avoid the law. But as time went on, I started to become curious. I started to investigate a little bit further. A few more articles popped up, one or two articles popped up in Bloomberg and the likes, and eventually it led me to reading the Bitcoin Standard. So if you want to note that down, if you're interested, read up on a book called the Bitcoin Standard. It blew me away. My background is in finance and economics and accounting and also information technology. So the two converged. It was kind of like technology and finance converging, and I was so compelled by it. I couldn't put down the book. I read it 3 times over and was blown away, and subsequently thereafter bought my first Bitcoin because I was just so interested in the technology. All right, but today I want to be impartial. I want to put the arguments for. There's some very good arguments for Bitcoin, but there's also a lot of arguments against Bitcoin. And I want to leave it so you make the call at the end of the day. I'll give you my final take. I've sort of alerted you to it at the start, but I'll give you my final take at the end. All right, so without further ado, let's get into it. All right, so what is Bitcoin? It's software, it's digital, it's decentralized system used for peer-to-peer transactions. So you're not going to get a physical Bitcoin like on the picture here. All right, you can't see it effectively. It's digital, it's computer code. So it's electronic currency. We live in an electronic era. We now have electronic currency. It's a store of value. So when we store something of value, typically with a lot of the banks and whatever have you, it's all stored electronically effectively these days. It can be used for payments. It provides transparency. If I pay 1 Bitcoin from Australia to somebody in Germany, it'll be recorded on the blockchain ledger and there's full transparency. So computers from around the world are used to verify transactions on the ledger, the blockchain ledger, which in turn is stored on the blockchain. So the ledger is effectively the blockchain. What's interesting is you, as a member of the public, you can log in, or not log in, you effectively just go to the website, blockchaininfo.com, I believe it is, or .org, and you can see exactly what transactions are taking place every day. You won't know who's behind those transactions, but there's full transparency in terms of what's taking place. Okay, so put a little link there for YouTube. There's a couple of really good videos there on YouTube. Be careful when you go onto YouTube. There's lots of scam type videos as well, buy now or else type thing. Just be careful, look for the reputable sources, and if you're interested, there's some excellent videos on it. Okay, so Bitcoin by many is said to be the internet of money. All right, so it's the internet of money. So what's all the fuss about? Why is so much interest? I believe a lot of the interest was because the price effectively went to the moon and back, as a lot of the Bitcoin investors would tell you. I remember back in the days when Bitcoin was $200-300 a coin, and it hit over 60-odd thousand a couple of weeks back. It's had a bit of a pullback, and I took the screenshot earlier this morning. It's around about 49,000, give or take, $500-odd, give or take. All right, that's US dollars per Bitcoin. You don't have to buy a Bitcoin outright. You can buy a portion of a Bitcoin. So you could buy 0.1 or 0.001 of a Bitcoin should you choose. All right, so a lot of investors out there do not necessarily buy a whole Bitcoin. And then you've got other investors out there that buy tens of thousands of Bitcoins. All right, so let's get to the origins of Bitcoin. So it all started with this white paper, as it's termed. All right, so a person a group of people, whatever it might be, under the name Satoshi Nakamoto, wrote the Bitcoin peer-to-peer electronic cash system white paper. So I'll just read out a little bit of the abstract here. So this came just after the global financial crisis. So it was interesting. Obviously, there had been some thought behind what had happened with the global financial crisis, and this was as a result. So the abstract noted, I won't read it all, and you can Google it up, just type in Bitcoin plus white paper. It's free on the internet. Anybody can access and read it. So the abstract notes, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. So you can see it was sort of anti-financial institution sort of driven. I guess there was a lot of anger after the global financial crisis, and as such, Bitcoin came about. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. So Satoshi Nakamoto wanted to ensure that you could use your electronic currency to pay people, but only once. So if you were spending one Bitcoin, you could only spend that Bitcoin once. The danger with electronic currency is that you could spend it multiple times unless there were checks and balances to avoid that. Anyway, went on to note the purpose of the solution to the double spending problem is using peer-to-peer network. The network timestamps transactions by hashing them, that's an important term, hashing them onto an ongoing chain of hash-based proof of work. So every time there's a transaction, it's added to the blockchain, and as there are more and more transactions each and every year, the blockchain gets longer and longer and longer. So the only way you could cheat the system would be to effectively get in and hack the blockchain, whereby you could override everything such that there was a consensus that everybody agreed with your new made up blockchain, and then take it forward thereafter. To do that today with the current hash rate, that being the computer power required, is close to impossible. Not to say it's not impossible, but it's getting close to impossible unless you've got some super duper powerful set of computers that the world doesn't really know about. All right, so the idea that Bitcoin can be hacked, I'll get into that later, is becoming less and less of a probability. It has never been hacked. The offerings of Bitcoin via the exchanges, they've been hacked, but not Bitcoin itself. Okay, so I won't keep going on about it, but in terms of the white paper, I'll just set it there for you to investigate further. But it's a very interesting concept using electronic cash. Okay, so going on a bit further, double checking, no messages coming through. We're coming through nice and clearly on the sound. Excellent. All right, so 21 million Bitcoins only, no more, no less. There are only ever going to be 21 million Bitcoins made available. We've mined, when I say mined, effectively that's the amount available. We've mined about 18 odd million of them, 18 and a half odd million. There's only just over 2.5 odd million left, I believe it is, on the latest count. Okay, about 4 to 5 million of those Bitcoins have been lost forever. So people who bought a Bitcoin, stored it on an exchange or a wallet, and lost their login details or made a mistake, whatever it might be, and it's gone forever. You might have seen a news article, a gentleman that threw away a hard drive that had certain passwords to a certain exchange, and he threw away a couple of $100 million worth of Bitcoin. So those Bitcoins are gone forever. So just like with banking, as with Bitcoin, you've got to make sure that you keep your login details secure and remember them. In this case with Bitcoin, you can't call up. If I lose my banking passwords, I can call up the bank, they can verify me, and I can effectively log back in, not so with Bitcoin. All right, so it's estimated that 20% of Bitcoin has been lost forever. 18.6 million has been mined. All right, so there's a 2 and a bit million left to get to 21. So 2.4 million left to mine. Miners are rewarded in Bitcoin for each block that they mine. Okay, so in order to make the Bitcoin available, miners need to maintain the integrity of the blockchain network. So when certain transactions are taking place, the miners ensure that the ledger is kept corruption free, and in return they get rewarded with Bitcoin. Not bad if you earn a Bitcoin, $50,000 worth, but I'll get into that later. There's a lot of computation power required. It's very expensive to mine one Bitcoin and very timely. Okay, so the blocks represent the ledger, of people sending Bitcoins to each other. All right. And as more and more transactions take place, the network grows larger, which in turn makes it more and more secure. A large network requires more and more computer power to prove and mine. So in other words, the bigger Bitcoin gets, the more and more transactions that take place on that blockchain, the more secure it becomes. The complexity of a network leads to a more secure network. All right, so the Bitcoin miners ensure no Bitcoin is double counted and verifies all the prior transactions. So it needs to be a consensus. All right, so if somebody comes in to try attack the Bitcoin blockchain network, the consensus would override to say, no, we do not agree, and therefore we don't verify that transaction. Okay, so the idea of somebody being able to come in and hack the blockchain is becoming more and more remote, as noted earlier. The reward halves approximately every 4 years. Okay, so this is what miners get. So approximately every 210,000 blocks that they mine, every 4 years, effectively the amount of reward diminishes. So the current reward at the moment for mining one block is 6.25 Bitcoins for every block mined. Okay, so there's around about 900 Bitcoins are mined each day. So I've got some stats here I'll read out here just in preparation for today. So as noted, 900 Bitcoins mined per day. It's about 328,000 a year. And there's approximately 144 blocks are mined a day at 6.25 blocks. Okay, should I say 6.25 Bitcoin per block. So 144 blocks at 6.25, that gives you the 900. So no more than 900 Bitcoins are mined a day. Now, bear in mind that every 4 years, in about 3 years' time, that reward will halve. So we're looking at around about 450 will only be made available a day. So you can see that Bitcoin is going to start to become more and more scarce. So a block currently takes 10 minutes to mine using immense power. So that's around the world. All the computers sort of working together around the world. It takes 10 minutes of world computing power to mine a block effectively on the blockchain network. All right. So if you try to do it on a home computer, I think we've got a slide on it, but basically it would take you something like 250 years or 2,000 years. So some ridiculous number that just would not be feasible. Now, when Bitcoin first came out, a home computer could mine a block. All right, but as the hash rate, the difficulty rate has increased, it's become more and more difficult. So in Bitcoin world, these machines are called ASIC miners. ASIC miners are used to mine. They're expensive, sophisticated mining computers. After 21 million has been mined, miners will be incentivized to process transactions due to fees charged. Right, so they'll continue to receive fees. Approximately 119 years until the last Bitcoin is mined. 2140 is the estimated end date. So a lot of investors out there were saying, well, but what happens when Bitcoin's all mined? Would that be a problem? I think for all of us here in attendance today, 119 years is a long time away. So a lot of investors were saying, well, it's not really an issue in our lifetime to consider. We're just looking at what's in front of us now. Right, so there's an image of what those ASIC miners look like, something along those lines, something like out of a space odyssey type sort of film. Phenomenal. All right, so it's often huge warehouses, have to be super duper cool, maybe running at 7-8 degrees Celsius, because these machines generate immense heat and chew up a lot of energy, but we'll get into the negatives shortly. So a standard home PC, here's the stats. I was totally wrong, even worse than I thought. 70,000 to 100,000 years to earn one Bitcoin. It's a bit contentious on some of the blog chat sites as to how the calculation is done, but needless to say, a long time, and not viable for any home PC anymore. Okay, a large ASIC miner setup can take up to 30 days to mine one Bitcoin. So a big, expensive rig like this that might cost several $1 million can still take them 1 month. All right, so one Bitcoin, you're getting about 50,000 US dollars currently. So you can see that it's expensive to mine Bitcoin. The collective power of mining PCs around the world can take 10 minutes, right, to mine one Bitcoin. So if you buy an expensive several $1 million system, take you a month, but all the computers around the world combining together, it takes them 10 minutes. All right, so total hash rate. So this is the power required to mine those Bitcoins. There's been a lot of argument out there in the marketplace, all right, saying that basically the value of Bitcoin is the cost to mine those Bitcoins, and as the hash rate goes up, it becomes more and more expensive to mine those Bitcoins. This means the more and more power required to unleash a Bitcoin, all right, to unearth it. You have to solve a whole lot of complicated calculations in order to be rewarded with a Bitcoin. Part of those complex calculations is to verify the blockchain, all right, to make sure that it remains secure. So you can see that over time, it's just continued to go higher and higher and higher. I took the screenshot just the other day, and although Bitcoin's price has fallen, what's interesting is that we continue to see the hash rate going up. And we all know that as the hash rate continues to go up, it's more and more expensive to mine, so therefore it most likely will be reflected in the price at some point. All right, here's another screenshot here from CoinDesk, very interesting. So this is the supply of Bitcoins. You can see between 2.9 to 2.15, there was exponential growth in terms of the availability, the Bitcoin supply. So on the left-hand side, this line here is the availability of Bitcoin. You can see that it starts to flatten out and then it gets to a maximum of 21 million. This is the rewards provided to the miners. Now this is very interesting. As price continues to increase, why would price continue to increase? Well, I'm not saying it will, but economics would tell me that as you decrease supply, price should increase provided that demand remains constant, if not increases. All right, we can see a lot of demand. There's been a lot of demand for Bitcoin out there. Supply is starting to taper off. So we're here in 2021. You can see we are starting to taper off. And as such, less and less rewards are being given to the miners to maintain the security of the network. But because the Bitcoins are worth so much, even though they're getting a lot less in terms of the Bitcoin availability, they're still getting a fair chunk of money to maintain it. Okay, so the setup here is you're having less supply coming into the market, which likely will drive up price. That has been the argument. All right, so in terms of where we are with Bitcoin, right, we've got a long way to go yet until we've mined all of the Bitcoin, but you can see in terms of a percentage, we're up to 93% being mined. So you can see most of it's already been mined. Now we're just getting down to the final bits, but it's going to take a long time. So you can see that in years to come, less and less and less supply will be made available. So the argument has been that as less and less supply becomes available, this will become more and more valuable. Okay. So let's look at the arguments for and against Bitcoin. I want to be impartial here. Okay, so arguments, let's start with the arguments against. Bitcoin is not backed by anything. There's no intrinsic value. It's not like a typical financial asset where you can calculate the intrinsic value. You know, what's the true value of Bitcoin? I did alert to the fact that you could use the hash rate. That could effectively be used as a bit of an instrument towards calculating a type of intrinsic value, but it doesn't fall into traditional financial 101 type calculations. It's not like I can say, well, now we're going to do the discounted cash flow analysis and we'll work it all back and this is what the value is worth. There's no cash flows, there's no sales, there's no gross profit margins or whatever have you that I can calculate, right? So it does not have an intrinsic value in the true sense. The government could ban Bitcoin. Now, there has been talk around the world. I think India's looking to ban it, China was looking to do so. All right, so the government could ban Bitcoin. Doesn't mean Bitcoin would die. It would still be out there, but there'd be a massive disincentive. Okay, but let me note this. Gold was once banned in the US. What's happened to gold, right, and thereafter? I'm just saying that gold was once banned. Bitcoin could be banned too. Doesn't mean it's going to die off. Bitcoin is only used by scammers and money launderers. Right, that's probably the most common used argument against Bitcoin. And certainly in the early days, that's the one I was thinking of. There was a place called Silk Road. There was an online nefarious website selling all sorts of awful things. And they used primarily cryptocurrencies, one being Bitcoin, for the payments. So Bitcoin didn't start off on a good note out there. It was unfortunately used for terrible purposes. It doesn't mean that technology is not good. It doesn't mean that the concept's not good, but it was used for bad purposes. And as such, it didn't do itself any favors with its reputation. All right, but here's some interesting statistics. 2.1% of transactions in 2019 were for criminal activity. That for Bitcoin, right? So 2.1% of all the transactions for Bitcoin were for criminal activity. Now, this is interesting. Cash was at the same level in 2019. It's currently at the same level. So it's currently at the same level. So if one were to say that Bitcoin should be banned because it's used for legal activity, well, then we should ban cash too, because cash is at the same level. All right. My other take on this with the arguments against, and I agree it is used for some illegal activity, but here's the thing. If you are a criminal, why would you want to use Bitcoin? Oh, but I'm going to remain anonymous. I can, nobody knows who I am. If you want to go in and buy a Bitcoin today, you have to do the same type of know your client, KYC, know your client type activity that you would have to do to open up a bank account. When you go and do a transaction on the blockchain, it's all recorded. So it would just be a matter of time until the authorities would effectively work out who was behind that transaction. It's all there on the blockchain. And a lot of people are being prosecuted several years later after doing transactions on the blockchain. So my take is that if you were to do a criminal activity using blockchain, it's probably a very silly place to do it. You might be better off drawing cash out secretly over time and building up a wad of cash so there's no record of it, and then making your transaction. So a blockchain could change the way we track criminal activity going forward. All right, the next argument there is Bitcoin is a Ponzi scheme. All right, well, let's take that argument. A Ponzi scheme, right? Well, let's see. A Ponzi scheme offers low risk, right? You get approached by those offering a Ponzi scheme, guaranteed, you're going to make about 20% a year. It's easy, right? And, so it's low risk because you're guaranteed, all right? And you're going to get 20% every year. Just give us your money. And those Ponzi schemes are always unregistered, aren't they? Right? Or typically unregistered, all right? Bitcoin doesn't fit any of that. It's not low risk. I think it's fair to say that most of us appreciate the fact that Bitcoin's been fairly high risk. It's very volatile. There's no promised returns. I can promise you there's a lot of volatility. It has been. There's no consistent returns, and it's no longer unregistered. It's a registered asset now, effectively. So if you want to go and buy Bitcoin, you have to go through registered exchanges for a registered offering. There's even ETFs now being provided for Bitcoin, and they all are registered. Next argument, Bitcoin is too volatile. Absolutely, very volatile. Look at this, Bitcoin. Here's the volatility, average annualized volatility. Bloomberg provided that. That's via the source here, but this original source came from Bloomberg. Look at the volatility of Bitcoin. Now again, I'm not going to get into the nitty gritty as to what time period that was calculated and et cetera, I think it's fair to say that I'm not going to get too drawn on the actual numbers itself. It's just Bitcoin is volatile relative to gold, the S&P 500, global equities, US treasuries, etc. So if you are after something with low volatility, then Bitcoin probably is not something that you'd be interested in. Okay, you'd be better off to buy, global equities or gold or commodities. It would have a much lower volatility on average. Bitcoin uses too much energy. So I alluded to the fact that these big ASIC miners chew up a lot of energy to mine Bitcoin. Yes, I absolutely agree. Look at that. Bitcoin uses more power than Argentina. Right? Argentina is a large country, a lot of people in Argentina. So it is an obscene amount of power being used up. Okay, so if Bitcoin was a country, it would be in the top 30 energy users worldwide. So that's often been the arguments. The counter argument is to say, well, hang on, green technology will enable the blockchain to be maintained via the mining and checks and balances on the ledger. So eventually green technology will assist there. time will tell. But as it stands right now, yes, Bitcoin does chew up a lot of energy. The argument is, well, what about other mining operations in the world? What about gold? Gold is very energy intensive. Gold is destructive. The mining of gold involves using dangerous chemicals to leach, ore to get the gold out, sulfuric and hydrochloric acids and whatever have you. I'm not a mining expert as such, but look at the damage that some of the gold mines have caused around the world over the year when some of those leaching pits have leaked and flooded villages and killed people. So, take that into account as well. But the argument stands, yes, absolutely. Energy, it's very, very energy intensive. This is a good one. Bitcoin can be hacked. Now, when I first started to read up about Bitcoin, I used to believe that myself too. Oh, yes, it's awful. It's this ghastly technology and it's getting hacked all the time. Who on earth would be foolish enough to buy this? Bitcoin can be hacked. Well, hang on. As I investigated further, Bitcoin has never been hacked. The blockchain has never been hacked. The exchanges which offer for you to buy and sell Bitcoin have been hacked. But the Bitcoin blockchain itself has not been hacked. So the argument there is, well, if you buy a Bitcoin on exchange, you want to remove your Bitcoin off the exchange into a safe place so everything is safe. Whoop, it looks like my lighting's gone, so I do apologize. Give me a sec here. I will work some magic here. And here we go. I'll just tidy up my image just a bit. There we go. Sorry about that. The lighting had died on there. All right, so Bitcoin, it's never been hacked. All right, so the technology itself is powerful. Don't be fooled by the article saying, oh, Bitcoin's been hacked. No, Bitcoin has been hacked, the exchange has been hacked. So the argument is, well, get your Bitcoin off the exchange and store it in a safe a Bitcoin locker. So some of the offerings out there is what they call cold storage. So you can effectively use a special type of wallet that takes it off the exchange, it keeps it safe. All right, so it can't be hacked. It takes it off the internet as such until such time that you put it back onto the exchange. All right, all transactions have been verified on the blockchain, which is public. All right, so you can prove there publicly that it's never been hacked. The blockchain exchanges have been hacked, but not Bitcoin. Safe storage practices for Bitcoin have been advised. All right, so just going through those notes there. Okay, let's jump to the next one here. And there we are. So Bitcoin is a threat to the US dollar. Yeah, it could be in years to come, and that's why it could be banned potentially, right? But let's just look at the facts. I found this offering there on Twitter called Documenting Bitcoin. I find them very interesting. They just provide statistics on what's taking place. So at the moment, Bitcoin's just on $1 trillion. So it's a Ponzi scheme. It's a worthless offering. Well, hang on. Anything that's got $1 trillion valuation is something that one would seriously have to pay attention to. So Bitcoin's reached about 6% of the value of the US dollar. All right, so it's certainly no threat to the US dollar, certainly not at this stage. The other thing that's interesting too is that if you go into Google and have a look, there's a website there called Asset Market Capitalization, or Asset Market Caps. If you type in assets plus market capitalization and lists all the market, all the different assets out there in the world, Bitcoin is getting close to approaching the same asset value as silver. Very interesting. Bitcoin surpassed the value of Berkshire Hathaway. It surpassed the value of a lot of big companies. It's bigger than a lot of the banks. I think it's certainly overtaken as a JP Morgan and a few others. All right, so it's a significant sized asset these days. Okay. Bitcoin transaction fees are too expensive. So the arguments will say, well, okay, sure, maybe I buy some of the other arguments, but it's far too expensive to do my transactions. Why would I ever use the transaction offerings on the Bitcoin network? Well, let's have a look. Fees per transaction. So you can see it's around about $15 odd per transaction. Now, the argument is, well, Bitcoin's it's worthless because why would I pay $15 transaction fee to buy a cup of coffee. A cup of coffee is only worth $6 or $7, $5, and I've got to pay what? Another $15 to do the transaction? That's ludicrous. The technology is hopeless. I would never use it. I agree in that respect. Certainly I wouldn't be using my Bitcoin to buy a coffee, but let me put it this way. There are several institutions that use the blockchain technology where they will do several $100 million at a time and only pay $15 to move that money. So what if you're a big institution, you did a whole lot of transactions during the day. So let's say you're a big institution like Microsoft, you do a couple of $100 million worth of transactions, let's say in the week, and at the end of the week, you want to then settle up. So you then need to move the money to wherever it might be, another account, whatever it might be. You could then send several $100 million in one hit, and you'd only be moving it for around about 15 to 20 US dollars. If you did that with a traditional bank, it would be a lot higher. All right, so Bitcoin is becoming a threat to some of the banks because it's starting to eat into the significant margins that they were making on transaction fees for moving money around the world. Okay, so if you get the chance, hop into Google just out of interest. Have a look there. There have been some transactions where people have moved billions, I kid you not, billions of dollars for less than $10. Okay, try that with a bank. You're looking at several $100,000. All right, next argument now. Miners get paid too much. The miners are just creaming it. They're making far too much. And we, as the investors into the Bitcoin technology, we're getting ripped off. So it's the whole thing's a scam. Why would I get into Bitcoin? Well, let's have a look. Cost as a percentage of transaction volume. So this is offered by blockchain. It's all public. You can go and see that there. And you can see it's a very, very small percentage. Okay, so that percentage there on average is lower than what the banks take. So if the miners are making too much, well then the banks are making too much. That has been the argument against that. Okay, so for further information, you just might want to jot that down, casebitcoin.com/critiques. casebitcoin.com/critiques. I thought they did a very good job. They list all the arguments, and then they don't use emotion. They just list the counter arguments and then let you decide. All right, so some arguments against. I certainly don't like the fact that so much energy is being used to mine Bitcoin. I think there needs to be smarter ways to do that, to look after the environment. But apart from the energy argument and the higher transaction fees for everyday type transactions, I don't really sort of buy into any of the other arguments. Having said that, let's look at the arguments for Bitcoin. Do I necessarily agree with all the arguments? Well, let's have a look. Bitcoin can be a solution to those who do not own bank accounts. So globally, there are 1.7 billion people who are unbanked in 2017, according to the World Bank in their 2018 report. Okay, well, that's interesting. But sure, so there's 1.7 billion who are unbanked, but does that mean that they would necessarily be able to do banking using blockchain technology? Because in order to do it, don't you need a smartphone at least, or if not, a computer? Of those 1.7 billion, not all of them are going to have that technology available to them. So sure, there is a large amount of people who are unbanked. Doesn't necessarily mean they're going to be able to use Bitcoin or the blockchain technology. So yeah, I kind of see the argument with that, but also see some strong arguments against it. All right. Let's look at the next argument. Money printing is endless and a hedge is required with the likelihood of inflation. Very interesting. We're seeing the early onsets of inflation. All right, if you're looking at 10-year Treasury bond yields, they're going up, and that's often an early onset for what the shorter term interest rates are likely to be. So rising interest rates and leading to higher inflation. We can't keep printing endless amounts of money and not expect inflation to take place. So here's an interesting statistic. Over the last 2 years, over 20% of all money ever generated has been generated. So 20% of all the money ever printed has taken place over the last 2 years. Okay, so it's quite eye-watering when you look at it. Here it is. So here is a chart for the M2 money supply. All right, so the M2 money supply in the US. All right, you can see, in the 70s, there was a bit of money printing, it was sort of growing, but by about 2000, it just kind of started to go berserk. And then by 2020, look at this, it's almost gone vertical. Okay, so there has to be some consequence. You cannot keep printing endless sums of money. And that has been the arguments for those who are pro-Bitcoin. Those against it say, well, hang on, it's necessary. It's part of the monetary system. We need to keep the money flowing. Okay, you be the judge. All right. The uptake in transactions on the Bitcoin network are growing. Well, let's have a look. Let's rely on statistics. More people are getting into Bitcoin. All right, so blockchain.com provides a very interesting graph. Here are the number of wallets. So that being, if you open up an account on an exchange, you buy your Bitcoin, and then you want to secure your Bitcoin safely, just make sure no text messages. Good, we're all running good, well at the moment. Okay, so the number of blockchain wallets. So you buy on the exchange and you put your Bitcoin onto a wallet to keep it safe. Just because there's a whole lot of additional wallets doesn't necessarily mean they're holding Bitcoins. So let's find out a bit more. So confirmed transactions per day. Right, well, okay, so I'm seeing more wallets. I'm also seeing more transactions taking place per day. On average, you can see it's really sort of gone up massively. All right, well, that's interesting. But just because there's a lot of transactions, it doesn't mean there's a lot of value in them. Maybe it's a whole lot of people making mistakes to try buy a cup of coffee and then realizing, oh, I've just been slugged $15 for that transaction. Well, let's see, what is the average value of those transactions? So estimated transaction value. All right, so this is per year. So, wow, you can see, you know, we're doing about currently around about 8 billion US dollars a year at the moment. And that's all the way up from about, what's that, you know, a couple $100,000 back in 2012. All right, so we're seeing more wallets and we're seeing the higher transaction value per transaction and more transactions. So, okay, going back to this argument here, it looks like that holds true, okay, based on those statistics. Okay, more institutions are adopting Bitcoin on their balance sheets. Okay, so more institutions adopting Bitcoin on their balance sheets. Well, let's have a look here. If you get a chance, read up on this one here, Bitcoin Treasuries. All right, so the web address is bitcointreasuries.org. Or just hop into Google, type in Bitcoin Treasuries. You can't miss it. Type in Bitcoin Treasuries and it'll come up. This is interesting, very, very interesting. Look at the institutions coming in here. MicroStrategy is bought, where is it here? So $2.2 billion or 91,000 Bitcoins, depending on the current price, around about $2 billion worth. 91,000 they've bought. Tesla, all right, so Elon Musk and the team, they 48,000 he has acquired. Square, that's Jack Dorsey, he also owns Twitter. He's no fool. All right, so very smart man. Why has he bought 8,000 Bitcoins? All right, what's that? 471.5 or 1.164, so for about half, what's that, $500 million worth, 500 million. All right, Marathon Digital Holdings, you know, 309 million there. What's it, 309, 125, 495. All right, so or have I got that wrong? But you can see effectively huge sums of money coming through. So, and these are not sort of no-name type people. These are smart entrepreneurs. Galaxy Digital Holdings, that's Mike Novogratz. If you Google him up, he's a very successful self-made, is he a billionaire? I think he's a billionaire, self-made billionaire, very smart gentleman. He was actually he attended the Olympics for the US. He was a wrestler at one stage. Then he went to work on Wall Street, and then he broke away from Wall Street, and then he got heavily into the crypto game. All right. Anyway, so just want to point out that there's some big names there. All right, so in here, if I show you some of the names that have got in, Blind Melon, NASDAQ, CME Group, DBS, Standard Chartered, PayPal, Morgan Stanley, you know, you have a look at this, it's starting to read like, you know, a dossier of a high-end type offering. These are certainly not small name companies that have got in. Okay, what is it that they know that I don't know? That's what I keep sort of asking myself. All right, so some of the wealthiest Bitcoin hodlers, and that's not a typo. That's Bitcoin technology terminology. A hodler. It started off as a bit of a joke. Some person on Twitter made a mistake and said, that they meant to say they're holding their Bitcoin, but they had a typo, and then it just got adopted in this Twitter sphere. People liked that term and joked about it, and it's now a term in Bitcoin world. If you're a hodler, it means you're a long-term holder. Okay, so you're a buy, hold, and hoper. All right, but you can see just some of the names here, some big names here. There's Michael Saylor from MicroStrategy, Tim Draper, a few of you might have heard of, Shangpeng Zhao, 1.9 billion, huge amount. Tyler and Cameron Winklevoss twins. If you ever watched that movie on Facebook, the twins, the Tyler and Cameron Winklevoss twins, noted there that there was some conspiracy over whether or not they were the inventors of Facebook, and Zuckerberg had taken that idea from them, and it went to court, and they settled with Zuckerberg and used a lot of that money and got into the crypto space, and they are now worth over $1.5 billion each. So they didn't make it on Facebook, they made it on cryptocurrency instead. So very smart people. So I don't know, you connect the dots. I'm seeing some evidence here that there's some smart people in this game. It's not just all about money launderers and scammers and swindlers type thing, right? Bitcoin is proving itself as a performing asset class most years. Most is the term. So let's see. Not all. So here we go. This gets really interesting. So here you can see Bitcoin. So in the early days, just like with any technology, if you get in on the ground floor in the early days, there's big gains to be had, and then it sort of tapers off. But you can see Bitcoin 211, 1,473, 186, 5507, 213. Wow, huge year. Then 58%. Bang. It would have been a very unpleasant year. 215, 35, 125, 133. Oh, a bit of a car crash here at 73. That was a bad year. Then up 95% in 219 and 301% for 2020. And this figure's probably changed now slightly because it has pulled back a bit, but up around about 70-odd% for 2021. I think 2021 started about 30,000 for Bitcoin, and it's now at 50,000. So it's about 67%. It's up for the year so far, down from the 85 at one stage. All right, but very, very volatile. Can you live with that volatility? Can you live with that volatility? Okay. And then you compare it to, let's say, the NASDAQ 100. All right, you get much smoother performance, right? There was only one negative year, negative 0.1, beats being negative 73. All right, but the returns are not as impressive, but the ride is much more pleasant. So it just depends, what are you after? Okay, so you can see annualizing 19-odd%, the NASDAQ 100. Bitcoin at a whopping 225, but the volatility is gigantic. All right, look at gold, so 9.66, negative 28 there. So gold did have some volatility in 213, but apart from 213, its pullbacks have been less severe than Bitcoin. So, again, you've got to be the judge. I certainly buy into the fact that it's highly volatile, Bitcoin. Okay. Bitcoin is no longer an asset that can be ignored. All right, so yeah, here we go. I was meaning to bring this up. Now, this is a little bit out of date. It's a couple days out of date now, but it's around about that $1 trillion mark. Okay, so you can see it's bigger than Facebook. So you could imagine what was happening on Twitter when Bitcoin, beat Facebook. There was a few references to the twins, the Winklevoss twins. So it was interesting at time to watch the comments. But look at this. It's approaching silver. 1.3 trillion, and Bitcoin's 1.1 trillion, give or take, around about $1 trillion. So, you can't ignore this asset class anymore. It's coming up. It's bigger than Tesla. It's bigger than Alibaba. All right. Look at Google there. Alphabet. It's getting into that Google space in terms of size. All right. But the almighty gold at 11 trillion. So a lot of pundits, investors out there have been saying that Bitcoin is targeting gold. It's going to be the future gold, and it's going to be better because it's going to be a digital gold. Okay, time will tell. Market capitalization, so the total US dollar value of Bitcoin in circulation. So you can see just how that market capitalization has grown to around about, after 2020, it rocketed off. So here's the Bitcoin chart. Okay, so I brought up one right at the start. You can see that it kind of pushed around about the 60 and come back to around about the 50,000 US dollars per Bitcoin. So let's get working now with VectorVest and get VectorVest to help us identify a few of these blockchain cryptocurrency type technology. So you might want to jot a few of these down. All of these companies here in the US in this example have exposure to the blockchain. NVIDIA, AMD, Big Digital, Tesla, Amazon, Microsoft, PayPal. That's Jack Dorsey's holdings there. PayPal is associated with that. JP Morgan, despite JP Morgan noting that Bitcoin was a scam, they've now changed their tune. MasterCard, Marathon, Chicago, Merchant Exchange, I think it is, and Square. There's Jack Dorsey again in Square. Okay, so these all have some exposure to the blockchain technology. All right, here's some further ones here. Overstock, International Business Machines, IBM. Right, so you can see here quite a few. Have you ever used DocuSign? Think about it. If you use a blockchain and you've got to sign for a document and it's locked into the ledger, the blockchain ledger, using the technology of the ledger, then it's locked in there forever. So you can prove that you did sign the documents. So this blockchain technology could be a wonderful way of preventing fraud in the future. Think about some of the other applications you can use. You can use it for logistics, for tracking shipments around the world. The opportunities for blockchain technology are massive. All right, it can do away with a lot of back office problems and a lot of fraud issues that can take place in certain industries where paperwork is fudged. If you ever watched like one of the air crash serious investigation type series, you know, where an aircraft goes down and then you get the forensic team that come in and analyze exactly what caused that aircraft to go down. It's fascinating how they can work that all out, and then they'll pinpoint it back to one bolt or whatever it might be that was screwed in incorrectly, which caused a flap to malfunction, which caused a plane to crash. When they go on those journeys to audit, often it's, oh, hang on, no, that engineer said he didn't install that bolt. But hang on, if I go back to this in this document, it's showing there's a variance. Hang on, let me interview this person. Oh, finally, the cat's out the bag. Yep, sorry, I lied because I was worried about my job. I made the mistake. Oh, eureka, bang, we've solved the problem. That's not going to happen on a blockchain technology. Could you imagine if an aircraft gets put together, everything has to get recorded on a blockchain equivalent for that aircraft? So when forensics are done, if there's an issue, the auditors can go back and see exactly what took place, when it took place, locked into blockchain. There is no ability to defraud the system. All right, so technology is fascinating. It could prove to be a game changer out there. It is proving to be a game changer. All right, so in the views, blockchain stocks in Australia. So if you can access to VectorVest Australia, so if you want to take out a trial, hop along to our homepage, www.vectorvest.com.au, and in there you've got access to a trial. Within that trial, what you can then do, I'll just show you how you can access, you can then read up about it. We did quite a bit of work on it. So here we are, vectorvest.com.au, and then you click on a risk-free trial. Take a trial, $10 US gives you 30 days access. When you're in VectorVest, click on views and go to the 12th of February 2021. Blockchain stocks in Australia. Very interesting write-up on there, and we provided a video on it. I'll leave you with two final companies to consider. Right, I'm not saying, I'm not licensed to give advice, so please do speak to your financial professional. Here are two interesting companies. MicroStrategy. So this is Michael Saylor's company. He's a self-made billionaire, a former rocket scientist, or at least trained up to be a rocket scientist. Right, so he's no fool. MicroStrategy are the outfit that own 91,000 Bitcoins. All right, so $2 billion worth. MicroStrategy's put most of his company treasury reserves into Bitcoin. So that's the profits that the company holds. MicroStrategy is a listed company. So he had to get permission from his board and investors and the likes. Okay, so when he did it, the share price was under $100, and then it rocketed up to over $1,000, and it's had a bit of a pullback since. If Bitcoin rockets up. Let's say it goes from 50,000 a coin. I don't know, I can't tell you what the future holds. If it goes from 50,000 to, let's say, 200,000 per Bitcoin, as some people are forecasting, MicroStrategy would benefit significantly. Time will tell. Next one there, Tesla. So Tesla, bought a lot of Bitcoin, as you saw in the announcements that came out. If you're following them the other day, I think the world was quite shocked by the announcement, and it certainly put Bitcoin on the map. So keep an eye on Tesla. What I like about these two companies, they're heavily exposed to Bitcoin, but they've also got lots of other income coming in via their core strengths. So MicroStrategy is all about developing software and strategy for businesses via their software, business intelligence type software. All right, so they're a big player in that business intelligence space. So the core holding of their earnings, of course, comes from that space, but they also have a lot of exposure to Bitcoin. So you've got the best of both worlds, where you've got a company that is earning a lot of income and holds Bitcoin if you want that exposure. Tesla, as we know, of course, with all the electric cars and the likes, and they also hold a lot of Bitcoin. So my take is that if you wanted some exposure, you can certainly consider these two companies along with some of the other companies that are listed in those Bitcoin treasury listings. All right, so let's draw to the summary. I've spoken about some of the positives. I've also spoken about some of the negatives. In my view, Bitcoin is an exciting new technology. With all new technology, there are threats. Right? So I see this more as an emerging asset class rather than an asset class as such, even though it's $1 trillion valuation. As the asset class emerges, volatility will likely reduce. We've seen that in the early days. You see, when you looked at the early days of Amazon, all right, how many times did you read articles saying that Amazon was going to go bankrupt? And Amazon is just a flash in the pan type company, and anybody invests into it is foolish and will lose their shirt. Okay, so Amazon certainly was very volatile, had some incredible volatility in the early days. Now it's a super duper a company and a force to be reckoned with. So will Bitcoin follow the same path? Potentially. However, of concern, as I noted, is the high energy use, but with an ever evolving industry, this most likely will be reduced via smarter technologies. Better to get exposure, in my view, to well-diversified companies holding Bitcoin such as Tesla and MicroStrategy, even though they've had big pullbacks because of Bitcoin in recent times. I like to get some diversification along with some cash flows in addition to Bitcoin. Now, it's not to say that I'm right. That's just my humble opinion. If you prefer to go out directly and get Bitcoin out and buy it directly via an exchange and store it on a safe wallet, then certainly that's something you can do. A lot of investors don't want to do that. They don't want to open up an exchange account. They don't want to open up a wallet. So if that's not what you want to do, then you are aware of two companies that have heavy exposure that you can consider. All right, I can tell you the given earnings per share. So back in these companies here, this is our 12-month leading forecast in earnings. I can't do that with Bitcoin. So I can tell you that Tesla's got some very good earning profiles. This is GRT earnings growth rate, the percentage it's looking to grow its earnings by. If you've seen companies with a strong GRT earnings growth rate and a strong EPS, this bodes well for future price appreciation potential. I can't do that with Bitcoin. All right, so I can't tell you the given EPS profiles for for Bitcoin, but I can tell you those for given companies that have exposure to Bitcoin. All right, so, and that's it. So there's my take. I hope you enjoyed it. I hope I was able to remain impartial. We've spoken about the pros and cons. Let us know in the chat box there on YouTube. Let us know what you think. Is this an emerging asset class? Do you think it's going to be more valuable over time as that supply reduces? Let us know what you think. Very interesting, very controversial type of asset class in the making here. All right, hope you got a lot out of this. Until next time, stay tuned. We've got some further hot topics of interest coming up. I can't wait to share those with you. All right, so with that said, let's turn off the live streaming. So I'll turn